We had some massive news for Symbotic stock investors this morning as a deal with Walmart sent the stock price up close to 20% on the day of the announcement. I'm going to talk about that and what it could mean for Symbotic stock investors. Of course, I'm happy about this stock price increase. I've had Symbotic stock rated as a buy for some time now, and it's good to see the company experience this kind of a boost. So let's get into the details of this announcement and what it could mean.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So Symbotic is to acquire Walmart's advanced systems and robotics business and sign related commercial agreement. They agreed to acquire the advanced systems from Walmart, and Walmart has chosen Symbotic to develop, build, and deploy an advanced solution leveraging Symbotic's AI-enabled robotics platform to offer Walmart customers greater shopping convenience through accelerated online pickup and delivery options at stores. And if you weren't already aware, Symbotic and Walmart have had a relationship together since 2017, I believe. They've been working together across Walmart's distribution centers where Symbotic has been automating using robotics to improve operations, automate the operations in Walmart's distribution centers. This deal is for accelerated online pickup and delivery options at stores. So it's a newer area that Symbotic will go into. And I think this says a lot about Symbotic's performance. If Walmart was not happy with Symbotic's performance up until this point, they wouldn't agree to hand over more business to this company. So clearly, Symbotic has impressed Walmart's management team, and they wanted to give Symbotic an opportunity to improve more of Walmart's services. Of course, automation and robotics is becoming more important as labor shortages and price increases, wage increases have plagued businesses worldwide, including Walmart. It has over or roughly 2 million employees. So automation and robotics is absolutely critical for a business like Walmart. It's reaching a point where it's experiencing diseconomies in scale in some places. That is, when you're growing large, it's actually hurting your operations because your existing infrastructure can only handle a certain amount of business. And when you go beyond that level, your operations become worse. And that's the risk Walmart runs into now that it's the largest, well, it's been the largest business in the world in terms of trailing 12-month revenue, but it's reaching the point where it's difficult to continue growing. But if it can harness technologies like Symbotic and what Symbotic can offer, it can unlock more growth for Walmart, allow Walmart to capitalize on its competitive advantages, which is its strong position in the supply chain, the strong negotiating power it has against suppliers who are desperate and eager to be a supplier for Walmart because of the total number of sales, total dollar value of sales Walmart generates is very lucrative for many of its suppliers. So the details of this deal are if the performance criteria are achieved, Walmart is committed to purchasing and deploying systems for 400 stores over a multi-year period. And associated with this development program, Walmart will pay Symbotic a total of $520 million, including $230 million instantly at closing. This will expand Symbotic's addressable market by more than $300 billion in the US alone. But a word of caution here. I always caution investors not to get too excited about these types of deals, especially these types of deals between a very large, very dominant business like Walmart and a significantly smaller business like Symbotic. These relationships often favor the larger company, and the company like Symbotic is happy to go along because of the impact it has on the share price, on investor confidence, right? I shared with you in the beginning of the video, the stock price is up over 19% on the back of this announcement. So imagine Symbotic management, they're smart, right? They know that an announcement with Walmart, expanding sales, expanding the relationship, is likely to have a positive impact on the stock price, right? Which could mean billions of dollars or hundreds of millions of dollars of increase in shareholder wealth. And so they're willing to accept unfavorable terms in these deals so that they can make the announcement and get the benefit of the boost from the announcement. Okay. I've seen this happen a number of times over the last 6 or 7 years. Sometimes they turn out to be positive. Most cases, they turn out to be negative for the smaller company. And I can go back several years. The announcement Rivian with Amazon, right? Amazon agreed to purchase like 10,000 electric delivery vans from Rivian. The announcement sent Rivian stock price soaring, but the details of the deal were not very good for Rivian. Rivian has proceeded to lose tens of billions of dollars on the bottom line, not just because of that deal, but that deal hasn't been very positive to Rivian's business. Plug Power is another lesser known company that had similar deals with well-known companies like Amazon and Walmart, and Plug Power has proceeded to lose significant sums of money on the bottom line. And I can go on and on with examples like this. I'm not saying that this relationship with Symbotic and Walmart is going to be similar. I just like to point that out, that factor that causes smaller companies like Symbotic, when they negotiate with larger companies like Walmart, they know that the announcement is going to send the stock price soaring. And so they're willing to accept terms that are not very favorable because they know they're going to get a boost from the stock price. And they hope that over time, it will unlock more opportunities and allow them to make money elsewhere. Even if this relationship isn't, the top line number you look at, 520 million, that's the money coming in. It doesn't talk about how much it's going to cost Symbotic to fulfill these orders, right? That's the big question mark. Can Symbotic fulfill these orders cost effectively? Which so far they've done relatively well, positive cash flow from operations. And so even though they've been working with Walmart on these deals, they've still been cash flow positive. And that's partly why I've had the stock rated as a buy, because it's one of the few smaller companies working with a larger company that's demonstrated positive performance. And so on the back of this deal, I'm going to update my recommendation for Symbotic stock. I had it rated as a borderline buy. I'm going to update that recommendation and reiterate that I have this stock rated as a borderline buy. I'll be curious to see the company's next financial statements, because remember, they had some issues with their financial statements. That was the reason why I had it at a straight out buy, and then I downgraded it to borderline buy because of those question marks on the financial statements. If I see more improvement there, if I see that things are normalized, there is no additional things that come out from those restatements, I wouldn't be surprised if I upgrade this stock to a full buy over the next coming few months. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.